The Morgan Report with David Morgan.
David Morgan of themorganreport.com. It is for the week wrapping 24 March 2023. Well, first up, nice article from Kitco. Anna, and I won't butcher your last name, Russia reveals its gold stash after it adds 1 billion ounces. Good article to read this weekend. One further perspective, I said that the gold run had started. I said that months ago. I think this is further proof that the banks that know what's coming or what's here, I should say, and on it goes, already moved into gold, and I've made that point several times. This is just another place that we can say it's been vindicated. So you can find this same comment in other areas, coinnews.net. I don't look at it often. The point being that gold's pushing toward 2,000. I was on a Twitter Spaces call, I think it was Thursday or Friday, and we went through several things, and one was what happens when gold gets to an all-time high, and I perked in and said, we'll continue. It may not the next day, it may take a week, it may take 2 weeks, it could take a month, but once you get a new high in any stock or commodity, it's pretty smooth sailing for a while. And gold will be no different, especially with the background of the banking crisis being unresolved at this point in time and the amount of gold that's been purchased by central banks and others. Here's one that's outside of my normal venue. This is from EE Times. U.S. prepares to establish $11 billion National Technology Center, and this is to make semiconductors. Some of you know, and most probably don't, that the amount of silver used in semiconductors is 44 million ounces on an annual basis presently. And also, semiconductors use gold and platinum. So there's a lot of carryover between the semiconductor market and the precious metals. Something to look into, obviously, with everything coming out of Taiwan primarily. There are others, but primarily it's Taiwan. This establishes something in the U.S. that can conduct business with semiconductors, and we'll see what happens. And it'll probably take longer than this article says, but obviously they're pushing for it. All right, this one involves silver and tellurium. Tellurium is actually very much needed in solar panels, and most people don't even know that that's a fact. And I learned it not that long ago. It was at the PDAC, I think about 3 or 4 years ago. Talking to several people. One was a geologist, PhD type geologist, and we had a conversation. I asked him at the end of the conversation, what mineral class do you think is in very short supply or could be squeezed, something to that effect? And he told me about tellurium. There's really not too many companies that mine it. First Tellurium is one of them. I checked the stock price before doing this video, and it's kind of done a round trip over the last year. It's been as low as about 15 cents. It's gone up to, looks like 25 or so, and it's back down around 17. It's definitely speculation, but what they put out in this report, which would of course be bullish tellurium, which I am, but I don't know how well this company in particular is going to do. Growth scenario aligns perfectly with our strategy for developing their Deerhorn project. Point being is that the is in the main paragraph that photovoltaic demand is surging, and of course that's true. PV Magazine just said basically the same thing, and I left that article out of this weekly update, but the idea is we did a lot of solar last year and probably will continue this year. So a little bit about the platinum market. Anyone that follows this weekly perspective knows I've been a platinum bull of recent date, 850 bottom. I'm there, and things continue to look fairly good. All right, I want to talk a little bit about platinum. Platinum supply headed for a deficit, says Northam Dunn. He is in the industry, so he's somewhat biased, but what he has to say is pretty interesting. He talks about that the new applications for demand using platinum, not foreseen a few years ago, such as the hydrogen economy, food preservation, and medical technologies. So similar to silver, platinum as a precious metal is used in industry. Moreover, the quest to reduce the carbon emissions, the ESG thing, is going to put more pressure on the metals across the board. However, what he points out, we haven't talked about this in some time, is that building a new mining operation continues to, I'll say, bog down, my words, not his, because of regulations, lobbyists, delayed and prohibitive new mine development. South Africa is key in long-term futures of platinum group metals. resources in the ground, many millions of ounces in the ground, which are untouched. Dunn said, he explained that starting a new mine would take as long as 7 or 8 years before entering production. And that's one of the keys to investing anywhere on anything. But if you're in a situation that the demand is high, supply is tight, and to get new supply is very distant, you're looking at a pretty good setup for increased price demand, or increased prices. That's how I see it. You can read the rest of the article. This one is from Yahoo Finance. As you can see, platinum seen at 1,500 by year end amid South African power crisis. This is a report from Bank of America. You can find it on Yahoo Finance. I will not read you the whole thing, but it does kind of, again, vindicate what I've been saying about the platinum market. I was very conservative. I was asked on TD Ameritrade on my first interview in a long time, which was about a month ago. He asked me about platinum, and I told him I was on the spread trade, short palladium, long platinum. He looked at it, popped it right up, said, that's a pretty good spread so far, and it's still working in our favor. What I wanted to say here was that I said $1,200 was my target, but once if it hits $1,200, I'm just going to move my stop up. And this article is making a case for $1,500. So 850 double will be 1,700, but I think on a percentage basis, platinum may outperform gold. And that was one of the reasons I decided to go into the platinum market for both spread trade in the futures market and also physical platinum. So time will tell. Find this one interesting, straight from Reuters. Volkswagen to invest in mines in bid to become global battery supplier. Been asked this many, many times, not just me, the industry. Wait, why doesn't Tesla buy some mines? Or why doesn't, Apple buy, silver mine or things along that line? Well, they do. They're very few and far between, but this article proves that as of March 17's Reuters article, Volkswagen plans to invest in mines to bring down the cost of battery cells. You'll see more and more of this. Samsung has a relationship with the Avino mines. If that's been that way for years. And they're, in my view, ahead of the curve. They know that they want a direct supply from a miner they can depend on and not have to worry about, inability to get the metal itself. And I'll go ahead and conclude with this article. This is from Investors Business Daily from the research department. Is it time to buy gold stocks and ETFs as banking crisis rocks investors? Short answer, yes. They're going to go through, here's what the charts show. And I won't read this whole thing. I think you can probably get this for free. I have been a subscriber to IBD for longer than I can count, pretty much from the second year they started publishing until present. Cause gold's been rising on fears and recession, extended inflation. We all know that. They did give a breakout point on Barrick, not my favorite, but chart-wise, it looks good. So sorry. Barrick Gold is forming a base with a 20.29 buy point. Shares reclaim the 50-day moving average. Many of them have in my list that is for our premium members. Talks about gold ETFs. It shows you several ETFs that have exposure to gold. Most of you know some of these anyway. You know the Nugget, the iShares, of course, the S&P, GLD, GDX from Van Eck. I think most of you know most of these ETFs. And if your goal is to invest as gold as a hedge against the rest of your portfolio or as a tactical investment, then GLD would be a wise choice. Now, I wouldn't say no, but of course I've advocated physical first, which is the worst case scenario. You've got real money if there's a banking crisis or other reasons. But on a portfolio basis, GLD takes a lot of the problems of picking the right miners out of the equation. You're just buying an index, and it does quite well when gold does well, and does not well when gold doesn't do well, obviously. And so the final header here is: are they a buy or not? And I'm having trouble doing just a little bit at a time. Anyway, although some stocks show buy signals, investors should be cautious about buying. IBD's current outlook is that the market is in a correction. And so what they're saying is that some of the gold stocks, many actually, have broken through 250-day moving averages. They're looking somewhat bullish. They're certainly been beat up worse than any other sector, especially the silvers. But all of that said, if there is a significant market correction, the golds will probably go down with it. The gold stocks, the ETFs, even gold itself. most likely. So we've been seeing in this rally, which is what you'd expect gold and silver to do, is taking place in conditions of a stock market that's still in the trading range. There hasn't been any real big moves in the stock market itself. And when I say that you're going to see gold and silver come down if there's a major correction in the stock market, I mean it, and I believe it's still to be true. But we don't know from what level that would be. Is it from now, or what if some of these pundits are correct and the stock market actually catches a bid and starts moving up and goes higher and higher, and then we get the correction. So for an example, just basis gold, let's say gold goes above the 20, I think it's 78, new high, no resistance, moves up, bomb, 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 bomb. It's up to near 2,200. Let's say it's at 2167. Hits that level, and then there's a big stock market correction, and gold corrects all the way back to, let's say, 1970 or something. Well, that's pretty close to where we are right now. So, my position is you hold a core position. If you don't have exposure, you should get it immediately, but not all of it. Buy half a loaf. In other words, get half of your position in, because the market knows more than anyone. Could go up, could go down, but at least you have a position. You'd be a lot better off, especially if you have extra exposure to the banking system than you need. Then you might consider parking some in precious metals. Probably the best and easiest place is certainly decentralized finance. But not everyone hears that message and not everyone believes it, but it's one I've been saying for a long time. So I'll sign off. David Morgan from themorganreport.com. This is another weekly perspective.